If you don't want to ever have to worry about money again, and if you don't want to have to rely on a job to earn money, then there are 7 places that you need to invest your money, and I'm going to be going over all 7 of these places today. Being financially free or wealthy means you have enough cash flow coming in from your investments and assets to cover your daily expenses. Now, the problem with that is when most people talk about creating this cash flow, they say one of 2 things. Either you got to go out and just buy some cash flow producing real estate, or you got to buy stocks that pay dividends. The problem is nobody can predict the future. Nobody knows what's going to happen tomorrow. But what you need to do is be financially educated and prepare for anything. I love real estate and I also love stocks, but I also know that nothing can go straight up forever and every asset class goes through their own cycles. Sometimes real estate is going to be producing cash flow and make profits hand over fist. Sometimes it's going to be the stock market. Sometimes it's going to be other places. So what you need to do is, instead of trying to guess what is the best thing to do, you need to be the person that's financially educated and can win in any economic situation. So if you never want to have to worry about going to work to get another paycheck, then there are 7 investments that you need to make. That way you have money coming in, even if the economy is booming, even if the economy is going sideways, and even if the economy is crashing down. The first investment you need to make is in real estate, but not just any real estate, cash flow producing real estate. This is not the home that you live in, and this is not a home that you're going to flip. Because when most people talk about making money in real estate, they assume that you have to buy a home like this, and let's just assume that you buy this home for $150,000. And now the way that you make money, people assume, is you have to hope that you can sell this property for $250,000 so you can walk away with your $100,000 check. Now, this is great. If you get this type of appreciation, that's fine, but I want you to get paid while you wait. So what I want you to do when we talk about owning real estate, and more specifically cash flow producing real estate, what you need to do is you want to buy this property, something like this, for $150,000. And now what you want to do is, instead of just trying to sell it for $250,000, you want to take this property, rent it out to somebody else for $1,500 a month. And now you will have a tenant that's living in this property that's not only paying for your home, they can help you pay for your mortgage, they can pay for your taxes, they'll pay for all your expenses, and they'll put some money in your pocket every single month. You get tax breaks, and you can get this appreciation, which is completely passive on your side if you know how to invest your money for the long term. Does this mean that real estate is completely risk-free? No. You saw what happened in 2008 when people who were highly leveraged, who didn't know what they were doing, got burned by the system. This is why you want to be a smart real estate investor and manage your properties smartly and buy properties that are producing positive cash flow, that are paying you to own them. What happened before the 2008 crash was people were buying properties where now they rent the property out and they would be losing money every single month, because the hope was in 2 or 3 years you will be able to raise rents, and now when you raise rents you will finally be profitable. So people were buying losing investment properties on the hopes that rental rates would rise fast enough over the years, that way eventually this property would be profitable. And even if it wasn't, property values were skyrocketing, so you can just cash out, refinance, and pull some of your equity out of the deal. Well, you know how that story ended. The whole bubble burst. So you want to be a smart real estate investor, own properties with equity in the deal, and buy properties that are producing positive cash flow. I'm looking for a minimum 7% cash on cash return on my money, meaning for every $100,000 I invest, or for every dollar I invest, I want to get 7% back every single year. So if I invest $100,000, I better be making $7,000 in cash flow a year. If I invest $1, I better be making 7 cents a year in positive cash flow. The second investment that you need to make if you never want to have to worry about going to work again is you need to own a cash flow producing business. Everybody, if you want to become wealthy, needs to own a business. Now, listen to what I said very carefully. If you live in a first world country and you want to become wealthy, you need to own a business. But that doesn't mean that you need to start a business, and that doesn't mean that you should be operating a business. Actually, most people should not be starting a business, and most people should not be operating businesses. They don't have it in them to run or operate or start a business. But what everybody can do is own a business. The way our tax system and our society works, you get benefited if you own the business, and you get punished if you work for the business. So what you need to do is you need to own a business. That doesn't mean that you shouldn't have a job. Most people should be working. Most people should not be running their own business because they don't have the skill, they don't have the expertise, they don't have the drive necessary and the risk tolerance to run and operate their own business. But even if you don't have that, you can still own a business that's producing cash flow and be the owner of the business. That way you get the benefits of owning the business without having to run it. Now there's two reasons why you want to own these type of businesses. The first reason is for the income, or we'll call it the cash flow in this case. And the second reason are the tax benefits. And depending on the strategy that you have to own these businesses, you can get one, the other, or both of them. The way most people's finances look is you go to work, you get paid, and then you pay taxes. But if you have a business, you can kind of flip things around, because now you can spend money using pre-tax dollars. You have the benefit now and the ability to spend money before you pay taxes. You don't have that option if you're an employee. Second, on the cash flow side, if you own an established business that's profitable, well, now if you own a piece of it, you will get your share of the profits every single year. So now you get your piece of the profits, and you're doing this as the owner of the business rather than the operator of the business. And there's a few ways that you can do that. You can go out and buy a physical business. There's a ton of websites online which show you businesses that are for sale. The key here is you want to make sure you're buying a business that doesn't require you to operate the business. You want to own a business that you can hire someone else to operate it for you. You can buy something like a hotel, or you can buy a franchise. Probably will have to spend some time managing the business, making sure that the business is running, but you don't want to be the person standing behind the cashier every single day. The alternative to owning the entire business is to own a partial ownership share in a business. The whole idea here is you want to invest into the companies that are producing value, that are generating cash flow. So you want to own a piece of the companies, or you want to own the company that's making this money. That way when these companies make money, so do you. The third investment that you need to make is a passive investment into the stock market. So in the second point, we were talking about making a more active investment in the stock market, because if you're investing in the stock market in number two, well, then you were looking for undervalued companies. You were researching companies that you want to own for the long term. Here, I'm talking about passively investing some money into the stock market. That way you have ownership in the economy, and as the economy grows, so does your wealth. An ETF is an exchange traded fund, and it gives you exposure to a whole bunch of stocks. So now instead of me trying to find the best stock for me to invest in, I have these ETFs. I do invest in individual companies, individual stocks like I talked about in number two, but this is a separate strategy that I have in addition to that. So that's money that I already have in the market, and that's cash that I put in when I find a good company that I want to invest in. In addition to that, every single week, I have money that leaves my bank account that automatically goes into these ETFs that gives me exposure to the broad general stock market. The whole idea being I'm just putting money into the market because I believe in the future of our economy. And if I believe in the future of our economy, I believe in the future of our stock market. So this is completely passive on my end. This happens every single week, every Wednesday I think it is. Money's pulled out of my account and it goes into the market. Doesn't matter what day it happens. We just want to make sure it's consistent. And now all I'm doing here is I'm building a separate investment account completely passively. I don't got to do any work to let it happen. And every single week, this account grows bigger and bigger and bigger. So this cash isn't sitting in my savings. It's just going right into the market. And as the market grows, so does my account. The key here is what happens if the market goes down? Well, I don't change anything. The market goes down, I keep letting this thing happen passively. The market goes up, I keep letting it happen passively. I let it happen consistently, and I let it happen passively, because now all I'm doing is I'm putting money in the market and I'm letting the market do its thing. So I like it because of how easy and simple it is, and it's an easy way for you to constantly keep investing your money in the market. That way you can let the market do its thing. The reason why this is important is because you want to have some real diversification. When most people talk about diversification, they have no idea what they're talking about. And so you want to have some diversification. You got to have the real assets like real estate. You want to own a real business, and now you have your passive investments, which give you exposure to the general economy and the general stock market, which we've seen over the last century grow by somewhere between 8 to 10% a year. The fourth investment that you need to own is in growth companies. In number two, I talked about cash flow producing companies. These are more of your established companies that are producing profits. Number three, I talked about owning ETFs. That way you get general exposure to the stock market. This is all about owning the startups, the innovators, the growing companies. Personally, I've been putting more of my time to learn more and starting to invest more into these companies. This doesn't have to be in the stock market. Again, you can invest directly into startups, or you can invest in startups that are new stocks on the stock market. The whole idea here is you want to be investing in some of the innovation, because times are changing. Our world is changing. Our economy is changing. Money is changing. And so if you want to be on the forefront of that, you need to own a piece of these growth companies. And there's a couple ways that you can do that. Either you can know these companies directly and you can invest in them, kind of like what you see happen in Shark Tank. So now you own some equity in these startup companies. You can work with crowdfunding platforms, which allow retail investors, regular people, to invest into these startup companies who are looking for investments, or you can look at some of these startups on the stock market. This investment is a high risk investment. So what that means is there's a big possibility that you can lose all of your money. You can invest your money into a startup that thinks that they're going to be the next Amazon, or that thinks that they're going to be the next Tesla. But then they can go completely bankrupt because they don't know how to manage their money, or they don't have a very good product, or people just don't like the company. But the upside with these higher risk investments is you also have the opportunity to make a whole lot more money, because this is one of the few investments where you can see 100x returns, because now you're investing in companies that are growing, that are innovating, and they have the opportunity to grab a whole lot more market share. If you're just starting off as an investor, this is probably not the first place you want to invest. One of the easiest ways to mitigate your risk is just to learn. You got to learn about how some of these companies work. You need to understand the industry. You need to know where you want to invest. The fifth investment that you need to own is real money, or otherwise known as gold and silver. Everything has a lifespan, from people to economies. And the thing that has caused many great civilizations and many great powerful economies to crash in history has been excessive money printing. The ancient Roman Empire had an economy built off of silver. But then when the government didn't have enough silver to expand their operations, to expand their military presence, to invest into their own community, that's when they started debasing the silver. They started mixing the silver with other metals, and people realized eventually that this silver that they were getting, the fake silver, wasn't real money. So then people wanted more money. And in the beginning, this printing of fake money helped the economy and the civilization grow very quickly, because now the government had access to more money and they were able to give this money to people, and people were willing to work. But eventually, people no longer wanted this fake money, and that's when the civilization came crumbling down. As you're building your wealth, you want to think about having some insurance against your investments and against yourself and against the government and society in case they print too much money, but having some real money, having some physical gold, having some physical silver. This is something physical and tangible that you want to own the real asset of. You want to own the physical gold, you want to own the physical silver. The idea behind these is not to get a huge return on your money. The whole idea behind this is now you have insurance against the worst case scenario type of situation. You have insurance against the economy blowing up, and you have insurance against the dollar just being completely inflated and losing its value. So this is something that you want to have as a hedge, as insurance that you own as a real money. Now again, there's a time and place for everything. The first thing you want to do is not take all of your extra cash and go out and buy some gold. First thing you want to do is you want to start generating some cash flow. As you build your wealth, as you build your cash flow, as you become financially free, now you really want to start insuring your wealth. And that's when you need to start owning some of these commodities, and you want to own the physical asset. The sixth investment that you want to own is some cryptocurrency. So the whole idea behind cryptocurrency is it's a movement of people wanting to move away from the fiat currency, from our dollars, because of all the reasons that I just talked about. Our dollars can be easily manipulated by the government, the Federal Reserve Bank, by just printing money. This, you can't really do that so easily. The whole idea behind cryptocurrency is a decentralized worldwide digital currency, meaning it's the same currency. One Bitcoin in America is the same as one Bitcoin in Japan, and it's the same as one Bitcoin in Mexico, and it's the same as one Bitcoin in India. So it's decentralized. You can use it anywhere in the world. Now, at the time of recording this video, you can't just walk into any store and go offer to pay with Bitcoin or Ethereum or Cardano, but you have to imagine that as time goes on and as people open up their minds to cryptocurrency, as people understand the powers of blockchain, that it's going to be much more widely used and accepted. The concern that I have with cryptocurrency is you have a lot of people buying cryptocurrency with the hopes of getting rich quick. When I buy cryptocurrency, my goal is not to see a massive return on my investment. My goal is to own an asset. My goal is to own another commodity, something like gold and silver. It's kind of like another insurance. It's another currency, another form of money that I want to own. And I want to own this for the long term. There's a lot of power and value that you get from the blockchain technology that's underlying cryptocurrency. I'm not going to go over all that blockchain stuff in this video, but the whole idea here is this is the people's money. People are moving towards cryptocurrency because they want to move away from fiat currency. They want to move away from their reliance on the government. They want to move away from their reliance on the Federal Reserve Bank, because these entities, these institutions have the power to manipulate the value of your dollars. They can manipulate the value of your savings. And so because of that, people are moving their money to cryptocurrency. And so that's why you want to have another hedge here by owning some of this cryptocurrency. And the seventh investment that you need to make, that we never have to worry about getting money from your job again, is you need to invest in your own education, especially your financial education. If you want to be investing in your education, you need to be investing for a specific purpose. What are you learning how to do? Are you learning how to build a business with e-commerce? Are you learning how to invest in real estate? Are you learning how to invest in the stock market? If so, then this might be something worthwhile for you to invest in. And you want to make sure that the person teaching you is actually doing what they teach. You don't really get that in school. You don't have teachers that do what they teach. These teachers are just teachers. So you want to make sure that if you're paying for education, especially financial education, you're learning from a teacher that actually knows what they're doing and that has actually done what you want to do. This single investment will help you get better returns on every other investment class that I just talked about, because it will teach you how to be a better real estate investor. It'll teach you how to be a better stock market investor. It can teach you how to understand cryptocurrency better. It'll teach you how to understand commodities. It'll teach you how to manage your money. It'll teach you how to be better with your money, how to grow with your money, and how to create new streams of income. This is something that you have to be investing in. That way you can lower your time to learn something, because if you're just trying to do it yourself, you can learn how to do anything. But you can learn a whole lot faster if you just pay someone to teach you what they learned from their mistakes.